Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which the market broke to the upside with this impulse. And at that point, that previous resistance was turned support here. The market tested it and rejected it to the upside. We can also notice at the same time, however, how now that the market has already created all this rejection to the upside, it is currently approaching exactly the previous high. In fact, from here, all this previous rejection to the downside was created, which confirmed this level as a very strong supply and resistance zone. And as the market is approaching this exact same zone, there is definitely the possibility to see a potential reversal to the downside being created away from this level. So here on the monthly, it seems like the market is approaching a strong resistance zone from which short-term bearish price action could be expected. The nearest target would be the previous monthly resistance turned support, which in this case is exactly this previous level from which this move lower was created, which is now turned support here. Now, dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, we can notice even more precisely how all this area is quite strong resistance. The market has created an impulse, correction, and continuation higher. The level that the market just rejected is exactly this previous weekly resistance turned support. And if we want to be even more precise, what we have to do is, as usual, as we have an impulse and correction, is measure this correction. And the way in which we measure it is by taking our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we had an impulse, a correction to the 50% retracement, and currently we're getting the continuation higher. Now, what could definitely be the case in a situation like this is that the market will go and create a potential double top at this zone, rejecting this previous monthly and weekly supply and resistance from which all this drop to the downside was created. Now, if we drop down on the daily time frame, what do we see? Now, from a daily standpoint, first of all, I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here, explained all the reasons for which we could expect this impulse, correction, and then continuation higher, and that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect first this correction, then the continuation higher. Then we had this creation of this M pattern. From here, explained all the reasons for which we could expect a push higher. And again, with the very last analysis, we had first this M pattern and explained all the reasons for which we could expect this rejection higher. And then from here, I made another breakdown explaining all the reasons for which we could expect this correction. And then the start of this continuation higher, which again is exactly what the market is giving us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, at the moment, since this structure has changed, it is definitely time for an update. And the first thing we have to keep in mind is that this is the most important level at the moment for this market from a daily perspective. This is in fact the previous daily resistance here, which is now turned support to this level and also acting as support here. Until the market will remain above this zone, it can easily continue higher. So only if we get a break below this zone, only after the break, this previous support would become resistance. So only if we get the break on the retest of this previous support and resistance, this is where we would have good probabilities of seeing more institutional shorting, which at that point would further increase the probabilities of a potential move lower. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, we can see how slowly we're starting to see once again an increase of the net positions. In fact, we reached the peak here at minus 113k net positions. Now net positioning are once again starting to get increased. Now what this shows is that institutions have once again started moving to the bullish side of the JPY. And keep in mind that all currencies on the spot are traded against the USD. So if institutions are moving to the bullish side of the JPY, it means that essentially they are shorting USDJPY. So if and only if we get a break below the support, at that point on the retest of this previous support to resistance, this is where we have good probabilities after this break of structure of seeing good institutional shorting. So if we get this break on the retest, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. However, time is definitely starting to run out, so I really suggest to go and check it out as soon as possible. And from here, there is the button to join in order to gain automatically access to the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.